Now we are continuing with commission under the topic of consumer arithmetic. Now, commission is a percentage in addition to your regular salary. So, as explained previously, but just to recap, if you are a salesperson and you have a particular amount of sales to achieve, or you are an insurance person and you have a particular target to achieve, usually in addition to your regular salary, you receive a percentage, whether it's 10, 5, 15, 20, however much, you receive a percentage of your sales as a bonus to you. So if you're working and your sales for the month is 50,000 and they tell you that you're getting a 5% commission, you're getting your regular salary, how much ever that is, plus you have to work out 5% of 50,000, and then when you get that, you add it to your salary, and your gross wage now will be your salary plus your commission. All right, so let's go on to this example across here. A sales assistant is paid a basic wage of $175 per week. In addition, she is paid a commission of 1.25% on the value of goods she sells. Her sales for a particular week amounted to $3,459, determining A, her commission, and then B, her gross wage. So A, how much is her commission? How do we work out her commission? Now that would be 1.25% of her sales, right? Which is 1.25. We know 1.25% is just 1.25 over 100, because if it was 12%, it would have been 12 over 100, right? So it's the same thing, 1.25 over 100, which represents the percentage, multiplied by her sales, which is 3,459. And when you plug this into your calculator and work it out, you will be getting 1.25 divided by 100 is 0.0125, and then you multiply this by 3,459, and you will get $43.24, right? Because we round up. Right, so that's her commission there. And now B, her gross wage, is her salary, or her wage, in this case her wage, plus a commission, which is now equal to, what's her wage? They told us her basic wage is $175, and we add her $43.24, and the answer for this will be $218.24. Now we will be moving on to percentage profit and percentage loss, which is very straightforward. We know what's a profit. A profit is if you pay a certain price for something and you are selling it, then you are going to sell it for more than what you paid, so you will make additional money off of it, so it's a percentage. A loss, however, is if you sell the item for less than what you paid for it. So if I buy a case of Chubby for $30 and I am going to sell this chubby. And when I sell all my chubby and I calculate my money, I got $25. I made a loss of $5. However, if when I calculate my money and meaning I sell each chubby for a certain amount of money, and then when I check it up, the total was 25. And if I sell my chubby for a different price now, and at the end, when I total it, I get $40, then I would have made a profit of $10. That is how a profit and a loss works in layman's term. However, a profit percentage and a loss percentage is where you put your profit over your cost price so P would be percentage over cost price, and you multiply by 100, or your loss percentage is your loss over cost price multiply by 100. Nice and straightforward, you know. Nice. Okay, so profit is your selling price minus your cost price. When you see SP, it's made in reference to selling price, cost price, CP. Your loss is your cost price minus your selling price, because your cost price will be higher if you made a loss. CP, SP. Oh, so there's a little error here. Your loss is your cost price minus your selling price, right? And your loss percentage is loss over cost price by 100, and your profit percentage is profit over cost price multiplied by 100. So let's get into an example. Okay, this is way too light. Let's get into an example. A businesswoman bought a stove for $12.09. Calculate her selling price if she made a profit of 11%. I think it's nice to operate as percentages. So if you bought something, your cost price will always be 100%. All right. Now, if you are selling for a loss, that percentage would be 100% minus your loss percent, right? So if you made a loss of 10%, it comes like you sold it for 90%. I hope that you all understand. Let me put it in writing. So your loss selling price would be 100% minus your loss percent. How much ever your loss is, how much ever the percent is. And your profit selling price would be the inverse of that. It would be 100% now add your profit percent. So in this case, what do we have? She made a profit. So her profit selling price would be what? 100% add her profit percentage, which they said is 11%, which is 111%. So we know that she made 111% as her selling price. So let's work this out. It will now be, we know how to work out a percentage, 111 all over 100 multiply by, how much did she pay for it? 1209, which is equal to 1341.99. Or there's an alternative method if you like alternatives. You can work out 11% first. 11 over 100 multiplied by 1209, which is 132.99, and then you can add it back to your selling price. Add it back to your 1209 plus 132.99, which is equal to, should be the same thing, right? Very good. 1341.99. I really like this method up here because it's so much easier. One shot, one working. You either add your profit or you minus your loss and then you work it out and you go straight to your answer. However, some persons like to take it in step, work out the profit first and then add it, or work out the loss first and then subtract it. Whichever method you are comfortable with, you feel free to go ahead and do that. Now we are heading over to sales tax. Sales tax, any kind of tax you really have to pay is towards the government, right? So sales tax is a percentage that goes to the government for public funding, right? So everyone has to pay tax. Once you're working, once you're a human and you're living in a particular country, you have to pay tax. Your tax could be on clothes, on food, whatever it is, you will just have to pay it. Sometimes we know, sometimes we don't know. When we go to stores, the tax is already included in the prices in Trinidad and Tobago. However, if you go to another country, let's say like America, when you look at the prices on the shelf or on the hangers or wherever, their prices are not VAT inclusive. So when you go to the counter, if something was $12, you may have to pay about $14 for it, right? Because they add the tax at the counter. So VAT inclusive is in Trinidad, we pay our VAT on our items. However, in other parts of the country, it's VAT exclusive, meaning that you have to work out your VAT and then add it. Well, the salesperson will do that. So we have a question here that says a DVD player is priced at $2,800 plus value added tax at 15%. How many dollars does the DVD player actually cost? Now they are saying $2,800 plus value added tax. So that means this is VAT exclusive. So we have to work out the VAT, right? So now the VAT will be what? 15% of 2,800, which is 15 over 100 multiplied by 2,800, which is equal to 420. And I hope that you have your calculators and are working this out with me as well. So now that you work out your VAT, the actual cost, right, of the DVD player would now be your 2,800, the cost of it plus the VAT, 420, which is 3,220. Great. So if we were to use the same question and do it in a way where the VAT was exclusive, a DVD player is priced at this value added tax included at 15%. How many dollars does the DVD player cost before tax? Right. So now they are saying that this is, so solution, we need to pick up, this is VAT inclusive, right? Priced at $2,800, value added tax included at 15%. So the tax is already added. So now we need to say, well, the cost now, their selling price is actually what? 100%, which is how much it would usually cost them, plus the VAT, right? Which is plus the 15%. So now their price is actually 115% because the value added taxes are already in there. So we need to find our VAT exclusive price, which would now be 100 without the VAT over 115 multiplied by the same thing, 2,800, which is equal to 100 divided by 115 multiplied by 2,800. This will now be 2,434.78. Now this is the price before VAT was added. And if you want to make sure, you can work out 15% of this 2,438. And when you add that 15% back to 2,434.78, you will get $2,800. So that's how VAT inclusive and VAT exclusive work. Let me just explain this one more time. The VAT inclusive one, the VAT is already inside. So this 2,800 here is 100% plus the additional 15%. So that's why we end up with 100 plus the 15, which is 115%. So therefore, if we want the price without VAT, it will just be 100 over the 115 multiplied by the 2,800, which is 2,434.78. And in this question across here, we had to work out the VAT and add it. So let me give you all a quick or. If we did it like the way we did the second question across there, their selling price would be I don't think I will make it. I don't have enough time. But it would be the same 115, but now the 115, 115 over 100 multiplied by the 2,800. And you will get the same answer, 3,220. Yeah, so that's that. Hope you guys understand VAT inclusive and VAT exclusive.